Time now for our business update. Yuka Royer is with us in studio. Starting, Yuka, with a surprising U-turn by Donald Trump in relation to this Chinese telecoms company.
Well, a really stunning change of heart, really, Eve. The US President Donald Trump announced this in a tweet that he had instructed the Commerce Department to reverse an earlier decision to penalised Chinese giant ZTE. Last month, Washington imposed a 7-year ban on American firms selling parts to the phone maker. Trump says too many jobs in China have been lost because of that, and that he now wants to help the firm get back into business fast. Georgina Robertson has more.
Slapped with a 7-year ban from getting parts from the US, the Chinese phone giant ZTE has been pushed to breaking point. There are 75,000 jobs at risk, and last month the crisis forced ZTE shares to stop trading, both in Hong Kong and on the Shenzhen index in mainland China. Over the weekend, Donald Trump tweeted that he's working with the Chinese President Xi Jinping to give ZTE a way to get back into business fast, because too many jobs in China are at stake. It was the Obama administration which launched an investigation into ZTE back in 2012. A legal and procedural case into sanction violations after they were found to have traded with both Iran and North Korea. In March last year, ZTE paid a fine of over $1 billion, but after failing to follow through on punishments of those involved, the 7-year denial order was imposed last month. With the current backdrop of escalating trade tensions and now Trump's intervention, the case has shifted gear and taken on more political significance. The US change of heart comes ahead of further China-US trade discussions. Bilateral talks earlier this month in Beijing didn't find resolutions. Cases like ZTE are seen as tests of whether or not Washington is willing to make concessions. The Chinese Vice Premier, Liu He, is due in Washington this week, hoping to head off a full-blown trade war between the world's two largest economies.
Let's take a look at the financial markets then. And Asian shares mostly rallied following that announcement from Donald Trump, with Hong Kong getting a particular boost, as you could see, over 1%. Though ZTE shares listed on Hong Kong still remain suspended. Here in Europe, trading got off to a fairly muted start earlier, with major indices all opening near or below the flat line. Meanwhile, oil prices have edged down from multi-year highs as a rise in US drilling activity pointed to increased output, but concern over Iran remains. Let's take a look at some more business headlines at this hour. JP Chase says it's planning to take a majority stake in China International Fund Management. The announcement comes just days after the Wall Street giant applied for a controlling stake in the Shanghai-based joint venture, taking advantage of new rules Beijing has put in place. The Chinese government last month allowed foreign banks to increase their stake to 51% in security companies as part of its effort to open up its economy. Xerox has walked away from a deal to merge with Japan's Fujifilm. The decision comes as a major victory for powerful activist shareholders who had contested the takeover. The two companies had announced back in January that Xerox would combine with Fuji Xerox, a 56-year-old joint venture, with Fuji taking a majority stake. The Japanese firm says it's considering legal action against the pullout. And Tesla's former safety chief has joined Waymo, the self-driving unit of Google's Alphabet. Matthew Schwal was Tesla's Director of Field Performance Engineering and was the carmaker's main contact with the US safety regulators. His departure comes at a time when Tesla is facing investigations over multiple crashes involving its cars. And finally from me, with North Korea pledging to reduce nuclear tensions, raising the prospect of an end to the Korean War, a hot new housing market has emerged. Demand for property in towns around the demilitarized zone, called DMZ, a heavily fortified border area between the two rivals, is surging on expectation of an influx of people and investment. Some people in South Korea have already bought patches of land in the area without even visiting them. It could be a risky investment, though. Even though tensions are easing, there are still some danger zones, as over 1 million landmines were laid in border areas in the aftermath of the war.
I'm not sure it's the first place I'd be investing
I would be buying
my money. Yuka Royer, thanks a lot for that business update.